All right, so DocuSign stock is falling in recent days and recent weeks because of a launch from ChatGPT of DocuGPT, which is a direct competitor against DocuSign. So that's a significant threat, and investors are asking me, what do I think about DocuSign stock right now following those developments? And of course, there was some selling from insiders, from top executives that's adding fuel to the fire, fuel to the set-off. And that's disappointing for me because I've had DocuSign stock rated as a buy all year long here. I've actually had DocuSign stock rated as a buy for a couple of years now, and it's performed relatively well over recent years, but the recent pullback is disappointing to be sure.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So my intrinsic value per share calculation, which is what you're looking at here, is my proprietary discounted cash flow valuation model, where I've valued DocuSign stock at an intrinsic value of $128 per share. The current market price is $69.73. DocuSign stock is trading near its 52-week low of $62, while the 52-week high is $108. The stock price was up over 2.4% today. And what oftentimes happens in these kinds of situations where there is a risk that's not yet reflected in the cash flow expectations, there's a big disparity between the current market price and the intrinsic value per share. This has happened before in other companies I've evaluated when there is a risk that could have huge implications, but does not yet have those implications, or those implications haven't yet been reflected in the company's valuation. So in these situations, what I like to do is apply a larger margin of safety in my valuation. So typically I'll have a 5 to 10% margin of safety. So for instance, if the current market price is $70 per share and my intrinsic value was around $80, which would leave like a 10% margin of safety there, where it would be fairly valued even though the intrinsic value is above the current market price, I double that or triple that in some cases when I see the risk as being incredibly uh, important to the company's prospects, which in this case I do. In this case, I do see these risks as being meaningful. So I would at least double my margin of safety here for DocuSign. So I wouldn't call this stock undervalued unless the intrinsic value per share was at least $80 compared to the current market price of 70. And in this case, I'm going to double that and say I wouldn't call this stock undervalued unless the intrinsic value per share was at least $85 to $90. And in this case, it is. The intrinsic value per share is well above the current market price, which leaves a large margin of safety here where I can still say DocuSign stock is undervalued and I can still rate DocuSign stock a buy despite these big risks developing for DocuSign stock investors. So as long as there's this wide gap between intrinsic value and current market price, and as long as the valuation looks very, very undervalued, I'm okay with rating DocuSign stock as a buy. It's still a leader in the industry, and the industry is still poised for growth because electronic signatures are such a big advantage and a big convenience advantage against legacy methods of signing documents in person, that the growth in this industry will allow for several participants to play in this space. So it remains to be seen the fallout of this new product from ChatGPT. I'm still evaluating the implications, and the risks have increased meaningfully for DocuSign. And I've always said that this is one of the bigger risks for DocuSign is a competitor coming in with a product that competes against DocuSign and gains significant market share because the impediments, the competitive advantages, the moats are not that strong for DocuSign. But what I've said is that the market, even though it's growing, it's such a relatively small market opportunity that some of the bigger players won't even be interested in competing against DocuSign. So, unfortunate news for DocuSign stock investors. However, I am reiterating my buy rating for this company while also highlighting that the risks have just increased meaningfully. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.